Welcome to Growth and Inspire, where we examine topics that make us feel inspired and grow. I'm your host, Bonnie Yam, and we will be posting frequently on topics to help you run your business better. It can be issues involving taxes, planning for business growth, or how to run your business more efficiently. Whether you're an individual or a business owner, this podcast is for you. Now, let's get started. Today, our topic is on strategies for tax minimization. And our guest is Chris Hynes. I've known Chris for quite a while. He's a very smart fellow with a JD and a CFP. So he's super well informed in the US tax system. Hello, Chris. So happy to
I,
have you on my podcast.
yeah, thank you for having me, Bonnie. I really appreciate it. Look forward to the discussion.
Before we start, can you tell me a little bit about yourself and your company?
Yeah, sure. So, yeah, as you mentioned, I'm an attorney. I specialize in tax planning, asset protection. Been a lawyer. I've been a lawyer now for over 30 years. I'm based in Florida, so I'm speaking to you from Florida. I'm originally from Massachusetts. I work with a lot of business owners, high net worth individuals, high income earning individuals, all different shapes and sizes in trying to help them not only plan for tax minimization, but take a really sort of a comprehensive, holistic approach to their overall planning.
Yep, thank you. Yeah, like I just want to say, like a lot of people know about the traditional methods, such as setting up a retirement plan, HSA, health savings account, or maybe, deferred comp. But I know Chris has something even more interesting to share. Some form of charitable donations. You do good and you get deductions. So can you talk a little bit more about the program that you have, Chris?
Yeah, so the name of the program is the Dual Harvest Program. And the Dual Harvest Program, like you said, it allows folks to do well by doing good, right? And we've all, I think, heard that phrase before, but this is something that we've been doing now for, I guess, about 3 years. It's myself and a couple of other tax strategists and planners, family offices. And what the Dual Harvest Program is, at its baseline, and we can sort of develop this and talk, I'll answer any questions you have on it, but it allows an individual to purchase fruit or vegetable seeds at a 75% discount to their current retail fair market value from a highly successful, long established seed broker based in California. Now, once you own those seeds, the broker will pack them, store them, and insure them and hold them for you, unless you want to take delivery because they're yours and you can. Um, and you hold them for 14 months. And then after a 1 year ownership period, we're able to then donate those seeds, and that is the program. That's how we do well to donate those seeds to a charity. And that charity is, we actually have a number of different charities that, but the client can choose whomever they'd like to donate to. But the charity is going to be geared towards feeding the hungry or something that's related to the seeds themselves. And so we have a number of different charities, as I mentioned, that are very eager to take these seeds. And one of the reasons why is most of the countries that receive the seeds that the charities are sort of acting as intermediary to get the seeds to, they can't afford the type of hybrid, sort of genetically sort of selected seeds that we have
Disease.
that yield just multiples of sort of the seeds that they're buying now. And so this is a means of being able to have those countries in working with the charities that are already working with the countries to be able to get those seeds to feed their population. I mean, a lot of these countries, such as
Need
I
the
mean,
food.
Haiti's a good
Yes.
example. And the Seabrook we've been working with has been working with charities in Haiti for years. I think Haiti is something like 80% agrarian dependent. And the tomato seeds, for example, they purchase, and I know this from talking to the seed broker. I've learned a lot about seeds, Bonnie.
Yes.
I
Yes.
didn't think I would ever know. But anyway, he works with the charities that are working with the folks in Haiti, and they're buying tomato seeds that will maybe yield a bushel of tomatoes.
Mhm.
The same amount of seeds through our dual harvest program, if we could get those, Katie, those are the ones they can't afford, but through donors, we
Mhm.
can get them there. It would literally double that yield. You end up with 2 bushels of tomatoes. So
Yep.
it's a great program
Mhm.
from a doing well standpoint. And maybe we can talk about the tax benefit. I
I
can
no
walk you.
no. I think people more interested in the numbers. Why didn't you go ahead and show us? How
I
you
know I
gonna
get
benefit?
excited about the seed side because it's something I learned that was new. The numbers I know really well. So if we go back to what I said, we're allowing individuals to buy these seeds at a 75% discount to their fair market value. They hold those seeds for a year. So let's do an example. Let's just say that someone purchased the seeds in 2024. Okay, so this year we purchased the seeds. And by the way, we have right now, I think, from a discounted cost, we have approximately $20 million of seeds, um, about, I'd say, 12 to 14 million based on the commitments we have already or are already
More
gone.
than
So we do have
50,
it.
huh?
Yeah, we do have an allocation left, but let me just, so if I go back and have somebody that wants to buy seeds in 2024, and let's say we get the appraisal on those seeds, and those seeds that they want to purchase are $400,000 worth of seeds. I know that sounds like a lot, but believe me, $400,000 fair market value of seeds, the types of seeds that we have. Again, in speaking with the seed folks, it's about 5 pounds worth of seeds. It's not a lot
Hmm. Hmm.
because the yield's tremendous. But anyway, so they would purchase those for $100,000. So you've bought the seeds for
$5
$100,000. They're worth 400,000, right? That's your discount. Now you hold those seeds for a year, and this time next year, so we're talking on October 30th, 2024. So October 30th, 2025, when you've held those seeds for 12 months, those seeds become a long-term capital asset.
Mhm.
And if you decide you'd like to donate those seeds to one of the charities that's going to use those seeds to feed the hungry, et cetera, the charities I mentioned at the beginning that we can facilitate an introduction to, you would, as the taxpayer, be able to take a deduction for the then fair market value of the seeds. So since you bought them for a 75% discount, so the fair market value was 400,000 in my example, you bought them for 100,000,
Great.
and then say you donate them and the fair market value is $400,000,
Mhm.
you would get a deduction on your Schedule A, right, for $400,000.
Mhm.
Keep the math simple. If you're in a 40% tax bracket,
Okay.
state, federal, you end up with a deduction of what? 160,000, right? 40% times 400,000 is
Mhm.
160. So that's,
Only
I'm sorry,
pay.
tax
Only
savings, tax
pay.
savings. So the
Yes.
tax savings, the deduction is 400. The tax savings is 160.
Mhm.
So your original investment was 100.
100.
You got a tax savings of 160. If you never met us, you would have just paid those tax.
You already
There are
make
your tax savings. So that's a $60,000 net sort of. I don't know if you call it a rate of return, but it's really just $60,000 that you created
uh-huh.
by participating in
Mhm.
in this program on your 100. So that's a 60% yield on your hundred thousand
And
dollars.
you're doing good. You're giving it away.
Oh yeah, yeah, yeah. Well, the
Yes,
good part of it is, yeah,
yes.
I can't say enough about that. So,
Besides, I
so yeah,
so smart.
yep, yep. So that's the idea behind it. There are limitations in terms of how much of a deduction you
Yeah.
can take because we're donating a long-term capital asset. So if someone said, "Well, geez, Chris, I don't know how much I should buy," or well, it really has to do with what your adjusted gross income is
Mhm.
going to be. And a lot of people have a general idea. Some people know exactly. Others say, well, pretty close. Um, you can deduct what are long-term capital asset donations. You can deduct up to 30% of your adjusted gross income. So, for example, if your adjusted gross income, in my example of the $400,000 fair market value deduction, were yeah, that'd be about, call it like $1.5 million, about 1.4, but
Mhm.
$1.5 million, you would be able to deduct 30% of that $1.5 million adjusted gross income for long-term capital assets such as the seeds and
Mhm.
donating them to charities. So you'd have up to 500,000 But
Mhm.
if your income were a little lower, and say you couldn't deduct the whole 400,000 in
Very boring.
2025, in my example, we
Mhm.
can carry it forward
For how
into
many
future
years?
tax years. Yep, yep,
For how
all of
many
it for
years? 5 years?
5 years.
Nice.
5 years.
So don't
Yeah,
worry.
five.
Yeah. So buy more now and then you can use it later. So don't worry.
That's right. That's what you can give, gift that keeps on
And
giving.
don't worry about the math. We can help you too.
Yeah, exactly. So that's the
I think
basic
this is
that's the basics
fantastic.
of the program. Do you have any questions that you can think of that people might want to know about that? I mean, I went through the
Minimum.
minimum.
How much do they have to buy? Minimum.
Oh, good question. Yeah, so the minimum is the purchase price minimum is $35,000,
Hmm. Hmm.
right? So,
Times four is the value. Yeah.
yeah, yeah, exactly. So
Yeah.
you're at what was that one?
And
Yeah,
you can carry five years, so no big deal.
exactly right. We do have some financing options as well too, so you don't have to put all that money out up front if you don't want to on the purchase price.
Hmm.
With a 10% down option and a 50% down option as well too. Just depending on
But
many
what
people
about
make. Huh,
if I
what's
have
that?
a friend, can we buy together to hit that minimum? No, or it has to be
Yeah, I suppose you could, and the way to do it might be to set up. You
LLC
could set up
again.
an LLC tax
I know you'd
as a
say that.
partnership. Yeah, set up an LLC tax as a
Uh-huh.
partnership, and
Uh-huh.
and then you'd be able to buy through the partnership. This is something that it's again a very very simple program. I try to keep it very very simple, and there's a lot of I have a legal guide that I did as well too. It's not tax advice, but it's something that people have common legal questions about this as well too that can help them. We have other sorts of illustrations and one pagers, so we have a lot of info that I'll
They
make
probably want to
available
know
to
the
them.
timeline because it's a long-term asset purchase, and then probably transaction-wise, it's going to take some days. So maybe like, you should get this decision done by a certain date and get back to Chris so we can get this administered by for year-end taxes next year, right? So when do you
Yeah,
want?
exactly. And I think one of the issues we're going to have, based on the fact that we literally just sort of rolled it out for
Hmm.
this year,
Hmm.
is that we already have. I mean, what is it? Call it almost three-quarters of the seeds have been spoken for already.
Hmm.
So I don't think that number is going to jump much higher over the next week or two,
Hmm.
but I just don't know. It just
I
sort
mean,
of
like,
it just sort of
if I were
depends.
to get back to you, you want to know by the end of November, before, of course, before the seats are sold out, but then, I need to give you time for processing too, like before the end of November. Would that be
Yeah,
okay?
correct. I mean, it's a really simple process because what you're doing, if we go back to the players here, we have the seed broker, who's the person who sort of originates. They plant the seeds, they determine the genetics, they plant the
Mhm.
seeds, they harvest the seeds, they bring the seeds into the warehouse, and then they typically will sell those seeds to distributors, and then those distributors will ultimately sell to farm stores and
Mhm.
farmers, and they're sort of those are the end users. The client is stepping into the shoes of a distributor here almost, right? They're buying the seeds from the broker.
Mass
Um, and
quantity.
so it's a really simple process because you're just look,
Just buying.
here's the
Just pay.
contract. You're going to buy them, you own them.
And
Here's
they
the
store
pictures of
for
them.
me
Here are the
too, so I
seeds,
don't have to worry about
and they
anything.
store them. Yeah,
Yes.
and
And you
that's
help me
all
distribute
included.
too, so I don't have to worry
That's
about
all
it. Distribute to the
correct.
charity. Yeah.
Yeah, that's exactly right. You could store them there, and then at the end of next year, this time next year, you could say to
Please
the
help
seed
me.
broker, "Hey, I want you to send these
Send it
to
to
whatever the
all
charity is."
inclusive. The pricing
That's
all inclusive.
that's right. Try to make it easy, or you could take possession of the seeds if you
I
like.
don't
You don't have to
too
keep
much
them there. It's
work.
it's up
Too
to
much
you.
work.
Totally up to you.
Well,
Yeah.
thank you
So
so much. I think it is a wonderful, wonderful idea. Yeah.
thank
Yeah.
you. Thank you.
Yeah.
Yeah, and one of the questions I get is, well, what about this year, Chris, right? Because
But
there's something, this is a next year, and it's
program
obviously
with
something
tax
that
deduction.
it doesn't really take much of a leap to determine that. You could probably do this each year. As long as we keep this program, our
But it has
intention
to
is to
be
grow
long
the
term.
program.
Cannot
Yeah, but
be.
you could do this. Yeah, it's a long-term hold, but at the same time, somebody who is paying quarterly estimated taxes, say starting in 2025,
Mhm.
starting in
Oh, so they
January,
have to pay
right?
quarterly.
Yeah, you
Yes.
pay right. You pay less on your estimateds, or if you're a
Hmm.
W-2
Because you know it's
or
going to go
employee,
down. Yes.
yeah, you do less
Ah,
withholding,
ha, ha.
anticipating that you're going to have a 2025
Deduction
deduction.
year end.
But still, for 2024, and I know end of year tax planning
to
A
like
lot of clients say,
yeah,
"Well, Chris, this is great. I'm gonna do this year, but I know this is going to be
tool to
sort
buy.
of next year, and then going forward, I'm going to
Yes.
continue
Yeah.
to do."
Yes.
And it also doesn't, eliminate all of your taxes either. It's not just sort of the one
30%.
size
You
fits
said
all.
only 30%. You can do
Yeah,
it.
30%, but it creates a very large deduction. So for this year, one of the other programs we have is a tax credit program.
Uh-huh.
Now, credit, as a lot of your listeners, I'm sure know, and your clients know, it's credit's a lot different than a deduction,
Deductions. Yes.
right?
Mhm.
So a credit is really just an offset to your taxes. So if you have $1 million of income and you have a deduction for $500,000, well,
Mhm.
then you still have income of $500,000, and you pay income tax on the $500,000. If you had $1 million of income, and let's say you had 400,000 of tax on that $1 million of income, and you had a $400,000 tax credit, you would pay zero
Zero.
tax because you would wipe out that tax. And
Yes.
so what we have this year is we have a tax credit program, and it's a Native American tax credit. There's a
Mhm.
company it's a publicly traded company that a little over a year ago put together a joint venture with a Native American tribe, and they're selling tax credits to U.S. taxpayers and raising funds, not only for the joint venture but for the tribe as well. And those tax credits, which are unique. It's very interesting because typically, if you think about, say, for example, solar tax credits, the solar
Mhm.
tax credits, you can, unless you're actively engaged in however you're generating the credit, it's difficult to use those credits against active income. In fact, it's not something you can do. I've
Mhm.
seen people try to finagle it in a certain way, but I don't think that's a
It's
real
more
smart
difficult,
move.
complicated.
Yeah, I think to me that's just way too aggressive. But anyway, so with the Native American tax credits, it's very interesting. They can be used against all income, whether it's
Anything.
active income, cap
Passive
gains,
income
passive
or
passive income, et cetera. You can use the Native American tax credits. And what's interesting is that it is a 60 cents on the dollar purchase. So if you
of a
want to, and the
discount.
minimum tax credits, Bonnie, are $100,000 of credit is the minimum. And there is no maximum. There's a
Right.
company, I think, that
Uh-huh.
based on the people we're talking to, is looking to get $1 billion credit,
Why
right?
not? Even
So they got a
40%
lot of tax
discount.
going on, right? But anyway, so look, think about it this way: if you had $100,000 of tax for 2024, and you would like to be able to not just write that check for 100,000, instead you want to write a check for 60,000, and you purchase these tax credits, then the $60,000 check would enable you to get the $100,000 of credits, and the $100,000 of credits would be able to offset your $100,000 of tax.
Wow. So you go down to zero, you pay 60 and you get 100.
There you go. Yeah,
So
so you
where,
pay your
who
60,
was
right?
paying that 40? The IRS just saying, I forgive you because you're buying this tax credit for a good purpose from the
Yeah, that's it. I mean, it's I have a really I'll send you. I got a really good presentation on the history of this and how the
It's
tax credits were
interesting.
generated, and the deal that the Department of the Interior and the Treasury and Congress made with the Indian tribes and how it all worked. But it's a
Uh-huh.
very interesting proposition.
There's got to be an
Um,
expiration date. Can't go on forever. This is too good.
no, and that's the thing.
No?
I think two things might happen, and this is just me kind of thinking
Mm-hmm.
thinking out loud here. I think number one, especially when we go through this initial tranche of about $5 billion of tax credits that people are buying now, and it's not advertised, but the program is
No need
just gaining a
to.
lot of
This
momentum.
is
Yeah,
good. Yeah.
but so once they go through that $5 billion allocation, I think what'll happen is that the next allocation that comes in, and they have, I mean, I think it was up to over 65 billion total. But once that next tranche comes in, I think these numbers
Will go down.
will compress a little bit.
Yeah,
And
of course.
typically, the tax credit programs I've seen out there where you're purchasing tax credits, you're buying them for 80, 90 cents, even more on
That's
the
more
dollar,
expensive, a lot
right? So
more
this is a
expensive.
very
Yeah,
low number, and so I
very
I
low
mention it
number.
because it's another thing that
It's crazy.
you know
This is
you
like
gotta you gotta you
a
gotta
fire
you gotta
sale.
think about, okay, I really got to start the due diligence now and look at this, because the I think they'll be around. They may change. but I do know that that price is going to
This,
change at
then
some
you do it
point.
for this year because the other one you had to have 1 year. You had to hope for 1 year. So
Yeah,
two to four
exactly.
by
And
this
even even next year, Bonnie, I suppose if these credits are around and you reduce, you get a,
Mhm.
you can deduct up to 30% of your adjusted gross income, but you're still going to have some tax left, and you could
Buy
buy the
that
credits,
credits
buy the
and then you
credits to
offset
offset that
100%.
tax
Ha
if you
ha
really wanted to. It's totally up to but
ha.
again, I don't know if that program, I know the dual harvest program
We'll still
will be
continue
around
on.
because our goal after we've done this now, this will be our third year. And we did it with some selected clients of a family office that I've been working with
Oh,
for
the
years.
other one, the dual harvest has nothing to do with this very special circumstances you buy credits. This is you're actually doing it.
No, totally separate programs. I
Yes,
just keep getting
completely
the
separate.
question about,
Mhm.
I love the dual harvest program, Chris, but what do I do about 2024?
I know. So now you
Yeah. Or even if you're in
yeah,
Florida,
now you have
if
a
you're in
trick. Yeah.
North Carolina, and a couple other states that were affected by the most recent hurricanes,
Hurricane. Yes.
yeah, you've got. I know in Florida we have until May, I think, to file your
Oh,
2023 taxes. So if you haven't filed your 2023
you
taxes,
can,
you still have time to actually
yes.
buy this. Yeah,
Yes.
isn't
Yeah.
that crazy? So
Wow.
anyway, just throw
That's
an allocation
fantastic.
there that to be
I
had.
mean,
But
this is the
anyway, so that
best
those are the two programs.
best story I've heard so far. It's really great. When you
Yeah,
talk about money, free money too, I bet everybody will enjoy it. So
yeah,
thank you
exactly.
so much for that sharing. This is really, really great. And don't forget to follow us on social media and please give us some feedbacks. And we really enjoy it because that will help us improve our content. And join us on our next podcast. We'll be talking about business insurance. So let's keep learning. Until next time, stay inspired. And thank you so much. Okay, bye
Thank
bye.
you.
Yes.